What exactly is the stock market? Consider the stock market to be the primary financial venue for investing. It is a list of all the locations where buyers and sellers of public company shares can meet. Wall Street and the stock market can refer to the full world of securities trading, including stock exchanges where public company shares are listed for sale and marketplaces where other securities are traded. The New York Stock Exchange is the world's largest stock exchange. Market indices such as the S&P 500 and the Dow Jones Industrial Average aggregate the values of groups of equities to reflect the stock market's overall performance. How does the stock exchange work? The stock market assists corporations in raising funds to fund operations by selling stock shares, as well as creating and sustaining wealth for individual investors. Companies raise funds by selling ownership holdings to investors on the stock market. These equity investments are referred to as stock shares. Companies who list their shares for sale on the stock exchanges that comprise the stock market gain access to the capital they require to operate and expand their businesses without incurring debt. Companies are expected to disclose information and give shareholders a vote in how their firms are operated in exchange for the right of selling stock to the public. Investors benefit from swapping their money for stock market shares. As corporations put that money to work building and expanding their operations, investors benefit as their stock grows in value over time, resulting in capital gains. Furthermore, as earnings increase, corporations pay dividends to their shareholders. Individual company performance varies greatly over time, but the stock market as a whole has traditionally rewarded investors with average annual returns of roughly 10%, making it one of the most consistent ways to increase your money. Who oversees the stock market? The Securities and Exchange Commission, SEC, oversees the US stock market. Following the stock market crisis of October 1929, the Securities and Exchange Commission, SEC, was established. SEC rules encompass four major areas: exchanges of stocks, dealers and brokers, financial planners, investing in mutual funds. The SEC's objective is to protect investors, to keep markets fair, orderly and efficient, and to stimulate capital formation. Companies that trade on the stock market must convey the truth about their operations, and those who sell and trade securities must treat investors fairly and honestly, according to SEC laws. Stock exchange versus stock market. The stock market is not the same as a stock exchange, despite the fact that the names are used interchangeably. Consider a stock exchange to be a component of a larger whole. The stock market includes several stock exchanges, such as the Nasdaq or New York Stock Exchange in the United States. When individuals discuss how the stock market is performing, they are referring to the thousands of publicly traded companies that are listed on several stock exchanges. Furthermore, the stock market in general can be conceived of as comprising a very vast universe of bonds, mutual funds, exchange-traded funds, and other assets in addition to stocks. What exactly is a stock market index? A stock market index measures the performance of a set of stocks that represent a specific industry or market segment, such as the technology, energy, and transportation sectors. The Dow Jones Industrial Average is frequently used as shorthand to characterize the performance of the U.S. stock market as a whole. The DJA is comprised of 30 blue-chip equities from American industrial companies. S&P 500. The S&P 500 index represents 500 of the largest corporations in the United States. The Nasdaq Composite Index. The Nasdaq Composite Index measures the performance of over 3,000 Nasdaq-listed firms. Markets of other kinds. In general, the stock market refers to the markets and exchanges where equity shares and related securities are traded. Markets exist for other forms of financial assets, over-the-counter markets. OTC markets provide as a venue for trade that occurs outside of mainstream exchanges. OTC trades are largely conducted between sellers and buyers, and pricing may or may not be made public. Most bonds are traded over the counter, as are many equities, including penny stocks. Commodities markets. Commodities markets trade raw materials such as steel, coal, and oil. There are over 50 major commodity markets throughout the world that permit trade in a wide variety of commodities. Derivatives. Derivatives are financial contracts similar to options in which the value is linked to an underlying asset. These are essentially contractual wagers on whether the value of individual securities will rise or fall. Derivatives can be tremendously profitable tools for experienced investors to hedge their bets while investing, but they can also be quite hazardous for newcomers. Foreign exchange markets. Forex trading is a global, borderless market for exchanging currencies. Forex traders earn from the continually fluctuating value of different currencies while also providing liquidity for international trade. Cryptocurrency. Bitcoin, Ethereum, and other cryptocurrencies can be purchased and sold on dedicated cryptocurrency exchanges. How to invest in the stock market. If you wish to invest in the stock market, the process is simpler than you might think. 1. Choose the type of account you want to open. There is an investing account for everybody, from retirement savings to education savings, from short-term aims to long-term ambitions. 2. Set up a brokerage account. Once you've decided on the type of account you want, you can open an account with a brokerage. Consider the expenses and investment alternatives available when selecting a company. 3. To begin, you must make an initial investment. You can also set up recurring deposits to automate your future investments. 4. Choose your assets carefully. You can buy and sell securities after your account is open. Different stocks and bonds are available, as are mutual funds, index funds, and exchange-traded funds, ETFs, that hold hundreds of different securities. Many experts advise using a diversified, fund-based approach to reduce the danger that a single bad investment would cost you money. 5. Buy your investments. Once you've decided what you want to buy, simply enter the ticker symbol in the buy field and the number of shares you wish to purchase. Now, this is a brief overview of what the stock market is, how it works, and how to get involved in it. But we strongly suggest you speak with a financial advisor before doing so, as although money can be gained in the markets, it can also be lost.